There are few in the Western world with the breadth of finance like Huw van Steenis. I'm not going to bore you with a resume. He wandered by a school named Oxford a few years ago, did some serious work with Bank of England, and had a tour of duty at Morgan Stanley. He is definitive on our financial system. Tim Adams, Scott Bessent, 10 a.m. What's a question you would ask the Secretary of Treasury?
Wow, Tom, thanks for having me on. Look, one conversation I'm hearing, which doesn't come out in the press much, is about the strain on cash flow for small business. It's a huge topic for private equity and for banks.
Right.
Let's imagine you put in a 10 million order in for toys. You now have to pay $24 million if they come from China. You simply don't have that cash flow. So my question would be, how worried are you about small business not being able to stock their shelves?
Okay, folks, you flunked this in a CFA exam. I've done it. I've enjoyed it. Working capital, and this is to go into the way a business runs. There's a thing called the cash conversion cycle. Paul, did you memorize that?
Yeah, I'm all
That
in.
was with
I'm
the
all
3
in.
ratio and the 5 ratio DuPont formula. Huw van Steenis, you're expert at this. When you see tariff adjustments, I don't understand how you go from 3% to 10% or 100% and your world blows up. I mean, that's where we are, right?
Well, look, I don't think any of us have seen anything quite like this before. I mean, I think I wrote a bit about the Nixon shock, where obviously Nixon did impose a 10% tariff for 4 months.
4 months?
For 4 months, but I guess the markets can't stand that, wouldn't tolerate 4 months here. And that did, that did lead to product shortages and to price spikes because simply people couldn't fill the shelves.
What's the cash conversion cycle do at Walmart? That's the heart of the matter.
That probably Walmart's not my expertise, but if I think about the conversations we're having, the focus is particularly around retailers, small businesses who just don't have the cash buffer. If you're Walmart, clearly you're really large, you're very sophisticated, you do have big cash buffers. But if you're a small business running from quarter to quarter, month to month, how are you going to be able to pay 2.4 times what you expected when you may be worried about not being able to pass it on? So what we're picking up is people trying to wriggle out of their orders if they can, and at least not renew those orders. That's the conversation that finance is having, which I don't see enough in the mainstream press yet.
To the extent that the president and his team are walking back some of this tariff rhetoric, has some of the damage already been done, do you think? Are we seeing it in the system already just because of the rhetoric?
So I think this is where we need to distinguish between sort of the growth shock and then kind of, let's call it, the more institutional shock. All the taboo questions which we wouldn't have asked in the past, which now opened. I think in terms of growth, it clearly has been a bit of a punch in the gut for small business, which is the heartlands of America.
Yep.
Larger business are clearly ducking and diving through this. If I think about my area, thinking about the finance. Look, the volatility has actually been quite good for the investment banks because they've been trading.
Yep.
But the business confidence,
One section,
but the lack of corporate confidence is pushing deals to the right. And certainly our conversations is some firms think actually the deal pickup now is not till 2027, not till 2026.
That's the first I've heard that. Wow.
Yeah, interesting. So, I mean, I guess if nothing else, we've heard this a million times before. The markets don't like uncertainty. But we're starting to see it in the survey data, whether it's the University of Michigan data or the, the PMIs. It's out there, right? I mean, it's not in the hard data that maybe the Fed looks like, but we certainly see it in some of the other softer data.
Yeah, I mean, look, I'm sure, my good friend Torsten looks great on this, trying to slice and dice this. But if you look at, ships coming into LA or elsewhere about their stocking, they're down by a third to a half. That's clearly a sign of stress coming into the system. No, look, I mean, the data will come through, but the Fed will need to be very can always be data dependent, but it will be the historic data. Markets are clearly going to move way faster than that.
Huw van Steenis with us, folks. He's with Oliver Wyman. Can't say the importance of this for global Wall Street. Even more important, in 50 minutes, Scott Bessent with Tim Adams in Washington, hugely anticipated. Okay, you mentioned Torsten Slok. You're Apollo Management. You want to go out acquire. You get the Deutsche Bank brain power of Dr. Slok. Wonderful. The bottom line, and this is Paul's world, is I don't buy for a minute everything's wonderful in private equity. What does an adult like you do? What are the tea leaves, the litmus paper, the measurements you're looking for stresses in private equity?
It's a great question. Look, these are unbelievably entrepreneurial folk, and so they're trying to sort of weave their way through this. Look, I think the first and second line is really about the order books. Has the sales come down? Whether I've got highly leveraged companies trying to forensically work through that. So I think it's about cash conservation and it's about getting a cost down. So I'm already picking up people saying to all their management teams, have you thought about a cost round? What are you doing about that? So that's one. But on the other side, in credit land, there are actually people trying to look at this as an opportunity and actually trying to buy in some of the credits at wider spreads than we'd seen 8 weeks ago.
There's somebody selling those spreads.
Totally.
Do they book a loss now?
Again, it depends. So we're talking about the private. Let's be clear. About 60% of the new inflows for the private market firms for the last 2 years has been credit. And overwhelmingly, as we've discussed before, that's coming from the insurers. These are steady hands. They want to deploy in size. But obviously on the equity side, there is more stress in the system.
Paul, I'll whisper, okay? Paul, AIG. Okay, next. Continue.
So, Huw, has Wall Street kind of, with the earnings estimates out there, has Wall Street adjusted to this new uncertainty, or do you still see downside risk to earnings estimates out there?
God, look, I think that, let's be clear, everyone is struggling to comprehend the range of scenarios. So to give you a simple answer is just inconceivable. I think if you like, what are the simpler moves? There's like the overwhelming conclusion of this will be to find a better way to diversify your portfolio. And that at the moment, the one-way trade is look more towards Europe and Asia. And look, European banks are still up 25% year to date.
Wow.
Let's be clear, and I know that may not be the place, that's a smaller market for you, but I've clearly on this side of the pond, look, I think it comes back to how corporate confidence plays out and the stress in the system and how quickly the administration blinks. These are, complex questions which you're dealing with every day.
Okay.
Sorry.
This is his wheelhouse. Huw van Steenis, folks. You got to start somewhere. And he started by being the required 14-page read every 4 or 5 days in the European banks. I mean, I'm doing, folks, what Huw doesn't understand, Huw's never used a Bloomberg. He has no clue. And the bottom line is I got JP Morgan hitting the ball out of the park with a price to book of 2 times and trading at 1/3 even after the 25% rally is BNP Paribas of Paris. I get the idea the English, the French, whatever banks are off the mat. But do they have the growthiness of America? I don't buy it.
No, I totally buy that. So that's a value trade, not a growth trade. Look, I think the challenge here is this is a growth shock and then somewhat of an institutional shock. And I think all the financials I'm talking to are reworking their plans, but they're struggling to sort of be precise because they just don't know how quickly the administration will blink on tariffs and therefore how big a shock it is to the system. But you're right, Tom. Europe's a value trade, not a growth trade.
So, but Huw, we have seen, I guess as recently as kind of late last year, very early this year, international money, non-U.S. money was coming into the U.S. markets in waves. And it was really noticeable. People were seeing in funds flows. Now that seems to have reversed a little bit. And we're now seeing funds go back into Europe, back into other parts of the world. Is that a short-term trade or is that something more sustainable, do you think, that those funds back out of the U.S.?
My sense from the international asset owners is that they want to continue to repatriate. And I think that's partly a tactical concern about the market situation, but it's also about weaker dollar. But also there's institutional pressure to deploy at home. So if you're the the largest 8 Canadian funds, they're looking to try and help the home building spree that my old boss, Prime Minister Carney, is going to be doing, alongside many other initiatives. In Europe, some of the big pension funds are looking to help fund the defense spending spree about to happen. So all of them are thinking strategically they need to have more money back at home. Now, that's at the margin, but it's definitely more money coming back.
Well, let's rip up the script in an extended conversation with Huw van Steenis of Oliver Wyman. Dan Tannenbaum's so brilliant on sanctions. They've really put together a huge team at Oliver Wyman, and we're thrilled he could join us in our studios today in New York. So then let's rip up the strip on this and go 60,000 feet. Mark Carney, there are other worthies that are driving our, Mr. Powell, the others that are driving our financial system. The heart of the matter is the re-nominal GDP, finally, back almost to Konrad Adenauer and Willy Brandt. We got to have a Germany with pop. Do you buy it?
So I think this is the spending of probably up to €1 trillion about rearmament, defence, and just quite frankly resilience is a real game changer in
But
terms
you
of.
think they're going to execute?
But I
what
think
you
they'll
just
be
said?
slower to execute. I mean, look, one area we've chatted about before is it's not just about government spending. You need private sector spending. And the
Thank
kind
you.
of breadth and depth of capital markets in Europe are still not the deep depth you want. And we need the plumbers. We need the plumbers to try and get the system to work much more effectively.
Who are the plumbers? I don't
But
understand
let's say, I don't know. If you look at the States, there is 4 trillion of US insurance money is in the market to fund the system. European insurers have got straitjacketed about how they can put money into equities, into venture capital, private equity. They're restocking government bonds.
This is the heart of the matter, folks. What he frames far smarter than me or Paul. The absolute heart of the matter. Can Europe, can the old world, can Rubini and Taleb's old world equitize? That's the heart of the matter.
I think it's right. It's equitize and providing risk capital, because it's really about, it's venture capital, it's growing small businesses, it's how do you do all these, defense tech startups. We need a range of risk capital.
I mean,
and the way the market, it's improving, but we need to turbocharge it from here.
Paul, I had a conversation with Lagarde, is trade minister of France, ready? 21 years ago, and we were talking the same thing we're talking to Huw van Steenis
Exactly.
about right now.
So, Huw, in terms of Europe kind of reinvesting in their infrastructure, maybe in their military, I guess what I've heard is, okay, Germany can do it. Poland probably could do it just because they have been doing it for a while, because given their geographic location relative to Russia. But can Spain do it? Can Italy do it? Can Portugal do it? I mean, do they have the wherewithal to do that?
So there's a fiscal question, and then it's kind of like, do they have the right ecosystem, the skills, the expertise? And you can see that actually, because Europe hasn't been investing in defense, there's been a real, aerospace is good, because there's a whole cluster around in the south of France. Actually, you should go and visit one time around, where the aerospace industry is coming from. But elsewhere, in terms of drones and some of the other areas, it's going to come. Look, the fiscal challenges are huge, and that's But in a way, what we've seen here is that the fiscal spending has been part of the US exceptionalism. The real boost to spending here has also come from the government purse, rightly or wrongly. I think we're going to get some of that in core Europe. Whether we're going to get enough to justify the valuations is a bit a tougher question.
Huw van Steenis, thank you so much. With Oliver Wyman